way I think, the first thing is on the market, and sustainable. I mean, a large part of that will be infrastructure, but there is a increased component of application also getting embedded, or in some cases we see BPO and infra getting embedded in the same deals. So, if I was just to look at what, just take readings from whatever is happening, reports that we get from, companies like ISG on the renewal market, you know, the 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 quantum of work that needs to be renewed is surely there. Whether you take calendar year 13 into 14 and then into 15, I mean the market exists. Uh, as long as we remain focused in our value proposition to the customers, focus in those accounts where we believe we can continue to add value, where we would be significant to our customer, be relevant for our customer, our point of view is heard, and we can bring about the change. We have a fairly exhaustive list of selection criterias before we kind of go after such a bid, because these are large transactions, and unlike a typical developmental or a project, the look back is very difficult, because as you rightly pointed out, once you've taken over the people, or let's say you've severed the people, it's not easy to say, boss, we are running 45 days late after 6 months, right? Because the customer has pretty much given their operational domain to us, right? So that's why the selection, the cultural fit, etc., also are important criteria, and not just the technology competence. I think technology, yes, we understand, we've done it many times, and we will, we can do it. We have run books and cookie cutter methods to do that. Absolutely. So if I just paint the picture, if let's say 40 to 35 to 40 billion dollars will get renewed this year, and let's say there is a 35% probability of there's a probability of 35% changing hands. We're still talking about a good 10 to 12 billion dollars worth of contracts, right? Now, therefore, when we look at that portfolio, we say, what is it that we want to go after? So would we go after, let's say, an operational takeover of a government market customer in US? Answer, maybe no. Likewise, there could be some other client profile. So sharply looking at which customers we want to work with, where there is that fit, is an important criteria for us. Having walked the path for 4 years with various kinds of engagements, we do have a view on what makes it work at the end of the day, right? The experience of having transitioned from large players like IBMs, HPs, CSCs in one bucket, or Capgemini or Fujitsu or Tito or T-Systems or other regional players, has taught us what it takes to move work out from different players, even after the customer has signed a contract with us, right? So I think all those elements are an important part of how we select, and then therefore I would still say that the market is there. We will continue to play selectively, and we will. Our win rates are important, because there's a certain customer acquisition dollar, if you may like, which we want to make sure has the highest ROI. So therefore, picking and choosing markets and segments where we want to play instead of going as a AK-47 is something which we kind of avoid. So that's on the market, and therefore to that extent, I would say most operational engagements, the market is there. Plus a lot of discretionary spend is getting bundled in the operational elements. So to that extent, I would say there is there's a potential upside on some of the higher value change the business services that are potentially possible along with that. An interesting change is happening. We talked about integrated operations and management services way back, 3 years back, the confluence of application run and infrastructure run coming together. I see a lot now. Now that model has been proven, customers have seen the success of that, and at the end of the day, it is really unlocking of the capital that they had locked in their previous constructs. So with that comfort zone on one side, they were taking a cautious approach to putting the savings back on change the business programs, and therefore they were still being sourced separately. I think the interesting trend which is emerging, and which we and I'm pretty hopeful that at least a significant portion of the addressable market will move, is where customers say, fine, we trust you to take over operations. Yes, we know you will deliver the potential benefits of that. One is robustness, scale, industrialization, plus the cost benefits. But why don't you take on some of the change the business program so that we can accelerate some of our drivers for increasing the growth on the business side. So I see a silver lining where some of this will start getting sourced together. It's already started happening in some engagements, but I think the trend has just begun, and I believe that's an important trend to watch out for. I mean, definitely. We definitely get a lot of. We do get first-time outsourcers as well, but I would still say that at least 75% will come from the rebid market in there. That rebid or renewal market, as we want to call it, whatever we want to call it. And it'll have a mix of infrastructure, it'll have a mix of application support and maintenance, and it'll also have BPO in my view. So I think that will continue to drive growth for a while, very simply because there is a finite timeline in which decisions need to be done. Now the question really is how much of that will we win, and which is why a very focused strategy around momentum and emerging momentum markets is important, which is financial services, manufacturing. These are real momentum markets because of the sheer weight that they have as a part of the overall spend. If you take the emerging momentum markets, which is life sciences and healthcare, or if you take public services, which we have, that again to us is an untapped market. So, largely untapped market. And that's why, our focus is around those. And if you will see, they reflect in the numbers, what get delivered from a growth. 4 out of 7 verticals have shown an industry-leading growth. So I think, that focused strategy, whether it is of a geography or it is of a segment, will pay, I think is working well for us. And I see the market available, which will renew. Yeah, obviously there will be external forces like cloud. There will be external forces, other similar external forces, which will come into play. And as a continuous business, continuously evolving business model, we will need to adapt our portfolio to be able to include that, which is one of the reasons why, if you remember, I think now well over 2.5 years back, we launched what is called MyCloud. And MyCloud really was a service aggregation and orchestration layer, which we had positioned in the market, knowing very well that there will be multiple, there will be an ecosystem that will be required to deliver the full IT stack. As an example, you will have Salesforce there, you will have Workday there, you'll have, some other software as a service product, which is hosted outside. At the same time, you'll have the enterprise data center, which will be there. How does one manage these hybrid applications across a hybrid infrastructure so that there is a single view, a single response, a single neck to choke, or a single a single back to pat, as you may like, is what is important. So that's where we are positioned on MyCloud, and we continuously believe that that's becoming more relevant. We continue to expand its capability so that we are able to play a larger aggregator role when it comes to delivering services in this shifting marketplace. I think it's a valid observation, right? And I think there's nothing wrong in that. The very fact that software services business is a lot more penetrated, right? If you take the offshore penetration of that market in G500 or G2000 customers, it will be in the 40 to 45% range, right? So on the same side, infrastructure management services is maybe less than 5% penetrated. So the headroom is obviously much large, and what we are witnessing is a huge uptake in that. Having said that, yes, application support and maintenance, we've launched Alt ASM. We've seen great wins in that. It's kind of repositioned around the Gen 2 outsourcing market, which is really the rebid market. So we are fairly confident that that will make a significant impact in the way even application services business, at least from our run side, will grow. Our capability around EES and ETS, I think, will be increasingly more relevant. On one side, we are seeing a dip in license sale, right? I mean, if you take the large SAPs and SAP and Oracle, yes, there is a challenge in terms of an on-premise license sell over there. So we are sharply using that same talent that we have to kind of be able to deliver some of the cloud stacks that the same companies have.
Okay.
So I think those are some of the things which I think will help the uptick go more. Of course, there are many more, but just as a few examples.